What's up, guys? It's Rey-Jay back with another video. And in this one, I wanted to break down what's happening with SPY, Tesla, and the overall markets. I'm also going to talk about some very key levels to be watching for, what's going on with their economic data, as we have a big piece of data that's coming out that will cause some more volatility. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out my Webull link. If you deposit any amounts of money, you're guaranteed 12 free stocks. If you deposit $500, you're guaranteed 20 in total. If you deposit $2,000 or more, you're guaranteed 40. The offer ends very soon in just 2 days. Anyways, now let's talk about what's happening with the markets. So right now, SPY is on a bit of a downtrend as we're coming back down to fill this gap. We saw PayPal's earnings being a little bit lackluster. The market's not really getting a good move off of that. We're dipping just a bit. But now the real question is what's going to be the next catalyst? That's going to be some very important data. So let's first talk about earnings, then I'll talk about the big catalyst that's coming out, which is going to be based off our economic data. So as far as earnings goes, just know that yesterday after the market closed, we had Ford, which didn't have the best of guidances, which is why the share price was down. Today we just had SoFi, PayPal, and McDonald's. They just came out before the market is opened. The market opens in about like 30 minutes from the time I'm recording this. And after the market closes, we have AMD, Alphabet, and Snaps. Just keep these in mind. Now, starting off with PayPal, shares have fallen in the pre-market on a miss in revenues, not the best of news for them. I just wanted to say that their EPS was a beat at $1.20 adjusted above expectations. The revenues at $7.85 billion. That's a little bit below expectations. And then for the fourth quarter, it says it right over here, they're basically calling for low single-digit growth, which is not that strong. Basically, the investor deck is saying that guidance reflects a price-to-value strategy where they're going to be prioritizing profitability and growth. So that's what's going on so far. I would say their guidance was not that strong, and then earnings were just like mixed. That's why the share price is down 2%, which is not the best of earnings for tech and etc. Now for SoFi also had its earnings. They did relatively well. They ended up beating on their EPS and revenue, and then we ended up seeing the stock price go up on a double beat on their Q3 earnings and then their guidance. But this is their guidance right over here. They raised their full year guidance to about 11 cents for EPS, which is close to what we were expecting before. And then we were also looking for revenue to be a little bit stronger than expected at 2.53 to 2.55 billion. Not bad whatsoever. So nice beat over there. Nice beat on expectations right over here for the current earnings, and their net revenue is also above expectations. Net income was not bad. So they had good earnings. Guidance has been raised. So bullish news for SoFi. This is quite good. And as far as McDonald's goes, the share price is down despite the fact that we saw a beat in EPS and a beat in revenue, or at least very close to that. But everything else was kind of so, at least thus far. I didn't see anything else that was too crazy. And I think that when you look at the overall traffic that was coming out to US locations, they are down just a little bit over the last couple of days because of some news that came out. So I'm not going to go over the full details, but I'm just going to say that that's why the share price is still down alongside other factors. So that's the reason why it's kind of performing the way it is. So far, earnings have been so, not that great. But for after the market closes, we have AMD and Alphabet, so just keep that in mind. Now, for the markets, now that earnings are out, despite the fact that that happened, earnings are still dipping. But at 10 o'clock a.m. Eastern Standard Time, 30 minutes after the market opens today, we have the JOLTS job openings and job quits data. So get ready for all of this. It's going to cause some more volatility. Remember, the jobs numbers affects the Fed's policies. It affects how the market sees the economy. So that's going to be very important, and we'll be watching to see what that leads to for the broader markets. At 10:30 a.m., we also have the Dallas Fed Services Index, the Dallas Fed Services Revenue Index, and more data that's coming out. So get ready for all of that, especially the unemployment numbers. So what's happening with the JOLTS job numbers? Don't forget it comes out at 10 a.m., 30 minutes after market open. That's going to be the next major catalyst. If SPY does not hold above 579.69, we're going to be dipping all the way down to about 579, if not even below that, to about the 577.8 area. And for bullish, we want to break past 580.5 to turn back up. As of right now, we do look a little bit more bearish when we favor this gap getting filled to 579, but then we'll see if we bounce or not. Right now, we look a little bit more bearish, technically speaking, but then we'll see what happens once the job numbers come out. Will they cause a big bounce back up, or will the market continue to dump? We'll just have to wait and see what happens once the data is out. Technically speaking, we do look a little bit weaker here, but we'll have to see what happens as we have this gap to fill, so give the market the time it needs. For ES, we look a little bit more bearish right now. We're on a bit of a downtrend. We're looking for this gap fill back down to about the 58.48 area. So I do see risk was coming back down to the 58.40 zone. Might be a little bit more down. So we'll see if we get a big bounce or not, though, depending on the jobs numbers. So get ready for volatility at 10 a.m. But for now, we do look a little bit more bearish. So I do anticipate a bit more downside, technically speaking. For Nvda, if we can't reclaim 140, there's a risk was coming back down closer to the 138 area. a little bit close to the 50 EMA. There is that risk on Nvda as we've been rejecting off this resistance, so it might dip a little bit more. If we reclaim 140.64, we turn back up, and if we can't reclaim that, we're looking for a dip to 138. Right now, I do see that risk, but then we'll just have to see how things end up going with more and more of this data coming out, so just give this the time it needs. For Bitcoin, we pumped very nicely to about the 71,500 area. For dipping to 71,000, we'll be watching this levels. If we hold 71,000, we're looking for a rebound. If we don't, we're going to be looking for a dip back down towards 70,500. So give this the time that it needs. As far as Tesla goes, Tesla basically has the support around this 260 area. Um, Basically, I think Tesla's going to try to rebound upon open to about 265. Will we get launched all the way up to this imbalance to about 268 or not? I'm not sure about that, but I do think we're going to push a little bit higher. Then the question is, if we can't break this high here, will we establish a lower high and then reject, taking us back down to this lower imbalance over here? I think there's a good chance of that potentially panning out. So look for a little bit more upside on Tesla for 265 plus, but then after the data comes out, we could be looking for a rejection just as a possibility. So just keep that in mind. NQ looks a little bit more bearish. We're looking for basically 20,500 as our chop zone. If we end up losing that support, we're looking for 20,400 as our target, and then 20,700 is our target above. My gut tells me this is going to dip a little bit closer to the 20,400 area. Then there's going to be a big move after the jobs numbers. We'll see if we bounce or not, but there is still that risk of downside on NQ. The QQQ might also attempt to rebound just a little bit before it continues to consolidate around 494. So I think we're going to be trading sideways between 494 and 496, just like how we did yesterday. But then we'll see what happens with the jobs numbers coming out. Will we pop higher? Will we see a rug pull if we lose 494? We'll just have to wait and see. For Aapl, I do want to mention we have this gap to fill down here. We're going to attempt to rebound to about 233 or maybe a little bit under that. And then if we establish a lower high again, we could be tipping to fill this gap all the way down to 231. So look for a little bit of a rebound and see if we get that rejection back down to where that support happens to be. So give this the time that it needs. And obviously, Aapl does have that downside risk. So just be very, very careful and open-minded with that. As far as the IWM ends up going, we are dipping right over here. If we end up failing to hold 221, we're looking for a dip back down to fill this gap. And then we have this resistance at 222. So I'll be watching to see if we end up getting this rejection for this dip back down here. If 221 fails us, we're looking for that gap fill, so watch for that very carefully to see if that ends up being the case. As far as coin goes, coin is dipping right over here, might be coming back down to fill this gap. It's about 216, so I'll be watching that very, very carefully as well. For a few more, we have Amazon. Amazon's consolidating rate might try to push towards 189, but I think we're going to be range bound between 189 and about 187. So look for a pop, then a dip back down to 187, some sideways price action. For Meta, we're trying to push higher. We're looking for basically 580, if not a little bit higher, before this starts dipping back down to 576. So overall, we're just range bound on Meta. Might dip a bit after our data comes out. Just be mindful of that. Microsoft is testing its 20 EMA. Might see a little bit of a rebound to about 427. Then we'll see if we get a rejection after that. So look for a little pop, and then we'll see if you reject once we get our data at 10 a.m. And Google is also likely going to consolidate. We have earnings coming out, so it might hold up quite well, but then we'll see what happens once earnings come out. That's going to be the next major catalyst. So get ready for all of this. With that being said, guys, I just want to thank you all so much for listening. Please have an absolutely incredible rest of your day. I will be back for another video update in just a couple of hours. But until then, don't forget that we're waiting for some big data once the JOLTS job numbers come out. So be prepared and be ready. And once again, I just want to thank you all so much for listening. So have a great day, guys. I'll see you soon in just a couple of hours, and peace out.